Welcome. In this video, what will be the next move of ZBCN coin? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The price has been under the influence of a certain downtrend for some time, and this puts pressure on the market, making upward movements difficult. Such technical structures often create a certain boundary and psychological barrier for traders. That is, the price that remains in a downtrend often reaches a stage that can signal a potential reversal. From a technical analysis point of view, the potential for the price to break above the current downtrend is significant. If the price manages to break the line of this downtrend, this breakout will be very significant, because such trend breaks usually indicate that the market is looking for a new direction and that the current downtrend is over. Such a breakout is not only a technical break of a level, but also a significant change in the perception of market participants. The breakout may signal a potential buying opportunity in the eyes of traders, and thus, the market may enter a somewhat more aggressive uptrend. At this point, the price crossing the falling trend line could trigger not only a short-term correction, but also a new direction for the market, built on a more solid foundation. Traders can take this breakout as a sign that the market could change direction and gain bullish momentum. The breakout would need to be strong, confirmed by the price remaining firmly above this level, and entrenched above the trend in the days that follow. This is a crucial step for a healthy price action to begin, beyond any temporary bullishness. With a break of the falling trend line, many traders and investors may see this as an opportunity, because usually such breakouts are the first steps of a new bull market. If the price rises to this level and a solid rally begins after the breakout, there will be new buying pressure in the market. This pressure can push the price higher, while at the same time breaking through the previous resistance levels. When the price breaks through such important levels, there is usually a psychological boost of confidence in the market. People may tend to buy more as the market searches for a new direction. Also, in technical analysis, following such breakouts, breaking above previous highs is an important sign that the market is indeed gaining new momentum. Still, a breakout doesn't always guarantee a high potential upside. Such trend reversals can be temporary at times, and there is also the possibility that the price could make a comeback again. However, in the current situation, there are strong expectations that after a downtrend breakout, buyers will have more influence over the market and prices will start to rise. This represents a significant opportunity for investors, but we need to look not only at trends, but also at other metrics. Stay tuned. The applications of price movements, and especially the Elliott wave theory, play an important role in market analysis. The Elliott wave theory analyzes price movements in 6 wave patterns in a specific order. These patterns help traders identify market trends and possible turning points. However, sometimes market movements break the predicted wave structure, and traders have to start a new analysis process. At this point, when the price breaks below its recent low and the current wave structure loses its validity, it is an important turning point for traders. This kind of situation is always a turning point where new opportunities can emerge. However, certain conditions must be met for the price to remain below its current levels and not break the old structure. According to the Elliott wave theory, each wave in the price structure follows each other. In other words, the completion of the first and second waves creates a basis for the market to move to a larger uptrend. However, the expiration of these waves requires a new structure. In order for this new structure to be established, the price must not fall below its previous lows, but must establish a solid foundation. Similar to the first and second wave structures, when the new wave structure exceeds certain levels, it may signal a rise. However, this phase should always be carefully monitored. This is because the movements of the price, as it forms this new structure, will be shaped by the shifting pressures of buyers and sellers in the market. According to the Elliott wave theory, the first and second waves must be formed for the new wave structure to be successfully built. The first wave usually marks a rise, followed by a short pullback in the second wave. This process helps to determine the general trends in the market. However, a break below the current low can disrupt this structure and signal the beginning of a new trend in the market. When the price breaks below the bottom, it indicates that a breakout has occurred in the market and the price action needs to be restructured. This can mean a significant opportunity for traders, because as the price forms a new wave structure, both risk and reward ratios can be reassessed. The successful construction of a new wave structure can make it easier for traders to anticipate possible big moves. At this point, when the price breaks below its lows, it signals a rebalancing process in the market. This process can often take time for market participants to regain confidence and for the price to get back on a firmer footing. If the price makes an upward move from this level, it could lay the foundations for a new uptrend. However, the credibility of this move may be reinforced by increased market volume and support from general market trends. Another important point to note in the Elliott wave theory is that each wave has a specific characteristic. For example, the third wave is generally considered to be the strongest. However, in order for this wave to be successful, the first and second waves must be solidly completed. By correctly analyzing these waves, traders can predict the direction of potential movements in the market. However, one of the biggest challenges in the market is for traders to get the timing right before the price breaks below its lows and forms a new wave structure. Every analysis of the market involves some form of risk-reward trade-off. Getting this balance right is crucial for traders' success. When the price breaks below the recent bottom, it forces traders to be more cautious because it indicates that the current trend in the market may change. The thing to do here is to wait for the first two waves of the Elliott waves to form. When analyzing the RSI indicator, a three-touch descending trend allows for a deeper understanding of market psychology and price movements. This type of structure typically signals pressure or indecisiveness in the market. As the RSI value touches the descending trendline over a period, it suggests that price movements are confined to a limited and narrow range. However, such a squeeze generally leads to a breakout, which could trigger a significant change in direction. A descending trend with three touches is a common occurrence in technical analysis. These touches provide traders with important signals about the market. For example, as the RSI approaches breaking this trend, it indicates that the market may be nearing the point of exiting its current downtrend. After the breakout, a shift in price direction could signal a new buying opportunity. This often marks a period where buyers gain strength and sellers begin to lose their grip. Such a breakout is not only technically significant, but also signals a potential shift in overall market psychology. At this point, after the RSI breaks the descending trend, prices may open the door to a new upward movement. If the RSI tests the level it broke above, a pullback or retest at this level can mark the first steps in solidifying the upward move. If the RSI stays above this level for a certain period, it suggests that buyers have gained strong control, and the price is likely to continue moving upward. Therefore, such a breakout in the RSI can signal a buying opportunity and may be an important indicator for investors to consider. In addition to price movements, this breakout in the RSI can also impact market momentum. With the break of a descending trend, momentum is expected to strengthen, and prices should move upwards. This situation may result in buyers gaining stronger dominance in the market. As the RSI breaks above the upper level of this trend, it becomes possible for prices to exceed previous resistance levels. This allows traders to update their target prices upwards and assess potential profit opportunities from a broader perspective. Short-term price movements are often subject to more instantaneous changes in volatility, but the RSI breaking this descending trend could indicate that the market may start moving upward in a healthier manner. This breakout could be particularly meaningful in a market environment with low volatility. Low volatility typically defines a market that moves sideways frequently without committing to a specific direction. The RSI breaking the descending trend could indicate that volatility is increasing and the market is gathering energy for a new upward movement. When the RSI breaks the descending trend, it is almost certain that the price will break the descending trend as well. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.